Welcome, dear traders. This year we are aiming for wage hikes that beat inflation in order to achieve structural wage hikes, Kaizen chief Masakuta Takura said in a video message. Negotiations between Japan Business Federation, Kaizen and the labor unions began just a day after the Bank of Japan's rate decision. The results should pave the way for the country's central bank to exit from its long-standing ultra-loose monetary policy. Japan's major corporations are expected to offer their unions an average wage increase of 3.85% this year. This could be the highest wage hike in 31 years. By comparison, the rate was 3.89% in 1993. On the other hand, rising wages will increase companies' fixed labor costs. Finally, companies will have to increase spending on pension contributions and benefits. And this is the main reason why many Japanese companies, especially small ones, have shied away from raising base wages over the past 20 years. According to analysts, the 3% increase in minimum wages will be enough to meet the Bank of Japan's 2% indicator target. Notably, despite the current maintenance of super soft settings, the Bank of Japan governor admitted the possibility of revising them in the future. At the same time, the timing of such hawkish changes seemed very uncertain in Kazuo Ueda's comments. Yesterday, the Bank of Japan lowered its forecast for core consumer prices to 2.4%. 6 months ago, Japan was cautiously predicting that inflation would be contained. Thus, the country needs confidence in economic growth to make a potentially hawkish change in monetary policy. And today's reports seemed to provide a little support for the Japanese economy. For example, the manufacturing PMI for January remained at 48 points. The previous reading of 47.9 was the lowest in 10 months. The indicator is falling amid declines in both production and in new orders. As we can see, with all of these conflicting factors, it's very difficult for the yen to decide where to go today. During the Asian session, the dollar-yen pair showed high volatility, trapped between the ups and downs, within the daily range of 147.60 and 148.40. However, the prospect that the Bank of Japan may revise its interest rates in the coming months overcame all other influencing factors. In addition, the Japanese currency is supported as a safe haven asset due to the risks of geopolitical tensions in the Middle East and the uncertain outlook for the global economy, particularly the Chinese and European economies. Therefore, the pair will likely keep the bearish momentum near 147.70 until the release of the US economic indicators and housing data later today. If the bearish trend continues, the pair may test the 147.30 and 146.00 support area. From a technical point of view, bulls may want to wait for the price to rise above the 148.80 mark. In this case, the pair may repeat its rally seen earlier this year. Uncertainty about the Fed's future actions is not only weighing on the yen, but also on its US counterpart. Investors are no longer as confident that the Fed will cut interest rates in March. The likelihood of such a move has diminished in recent days amid strong economic data and the mostly hawkish comments from the Fed speakers. While Fed officials will not make any comments until January 31, comments made by the former head of the St. Louis Fed have added to confusion. Yesterday, James Bullard suggested that the central bank could start cutting interest rates before inflation reaches 2% as early as March. Perhaps it was Bullard's words that put pressure on the US dollar and set it down to the 103.30 level, considering that the upper boundary of the range at 103.80 is the 6-week high, and the decline in the greenback does not look dramatic yet. Yesterday, the greenback jumped against its 6 major counterparts on a strong US retail sales data and a consumer sentiment which rose to its highest level since July 2021. Today's batch of statistics could have the same effect and trigger a bullish rebound into the resistance area of 103.70 and 104.20. However, the US dollar index remains under selling pressure. In addition, the Bank of Canada's interest rate decision will be announced today. Therefore, the greenback may continue to bearish momentum and drop to the support of 103.10 and 103.00. A weak US dollar and the rise in oil prices help the antibody currencies to strengthen. At the same time, inflation in Australia is showing the first signs of a slowing, and this was announced today by the head of the country's sovereign wealth fund, Peter Costello. His comments, as well as the continued stable demand for the US dollar amid escalating geopolitical tensions, kept the Aussie within the range of 0.6560 and 0.6590. At the same time, the Aussie failed to breach the 0.66 level, which is critical for its further growth. In general, the Australian dollar continues to maintain bearish momentum. In the case of a further development of this scenario, it may fall toward the support of 0.6530, and the next resistance is located in the area of 0.6610 and 0.6650. The Kiwi dollar pair was consolidating during the Asian session. However, it managed to pierce the 0.61 level. By the beginning of the European trading session, it was already above the 0.6120 level. At the beginning of Wednesday, the pair was trading within the range of 0.6080 and 0.6130, aiming to move toward the resistance area of 0.6130 and 0.6180. However, technical indicators are giving bearish signals. Therefore, a drop to the 0.6060 support level cannot be ruled out. On Wednesday, the dollar-rupee pair was also showing a bearish trend. Today, the rupee has strengthened in the range of 83.17 and 83.20. However, the Indian currency's stable position in the financial market is still questioned, as the data of the National Securities Depository showed last week from Wednesday to Saturday, foreign investors withdrew $2.8 billion from Indian stocks. According to analysts, this outflow was largely due to foreign investors selling shares of HDFC Bank Corporation of India after its disappointing quarterly reports. As a result, the dollar-rupee pair remains bullish. Meanwhile, the euro-rupee pair has fallen to 90.57 from 91.87 since the beginning of January. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below, and see you online soon.